Let's map the ballot into three buckets: leadership and compensation, board and governance, and shareholder proposals. Leadership and compensation is where the headlines live. Proposals 3 and 4 center on Elon's role and pay structure. They are performance-based. The design is simple in principle. If Tesla hits aggressive operational and market milestones over the next decade, Elon earns. If it doesn't, he doesn't. Supporters see this as aligning incentives with value creation and keeping the architect of Tesla's vision fully engaged. Critics worry about concentration of control, potential dilution from equity awards, and whether the bar is calibrated correctly after a period of volatility. The practical question for you is binary. Do you want Elon locked in, explicitly incentivized to pursue ambitious growth targets, and likely to consolidate influence if those targets are met? If yes, you vote for 3 and 4. If you want to limit concentration, reduce equity overhang, or signal a pivot toward a more traditional governance model, you vote against or abstain. Be clear with yourself on time horizon. These proposals are not about the next quarter. They hardwire a decade-scale bet. Proposal 2 is say on pay for the broader executive plan. This is advisory but consequential. Tesla's model skews performance-based already. If you think execution should be recognized when targets are met and withheld when they're missed, you vote for. If you believe payouts have not tracked outcomes or the metrics are misspecified, you vote against to send a signal to the board. Now the board. Proposal 1 is the election of directors. This is where nuance matters. If you want a board that pushes management with hard questions, you do not have to reject everyone. You can express a view seat by seat. Directors on compensation and governance committees draw the most scrutiny because they shape incentives and oversight. Ask yourself, has the board demonstrated independent judgment, transparent communication, and timely course corrections when needed? If your answer is yes, you'll likely ratify the slate. If your answer is not consistently, you can withhold from specific committee heads to register that view while still supporting other nominees you see as strong operators or builders. Auditor ratification sits quietly on the ballot every year. That's Proposal 5. Unless you see a pattern of audit failures, restatements, or independence issues, this is typically a routine yes. If you have concerns about tenure or scope, this is your chance to flag them. Most investors treat it as housekeeping, but housekeeping matters when confidence is fragile. Two governance mechanics are high leverage: supermajority rules and director terms. Proposal 6 seeks to eliminate supermajority voting. In plain English, it makes it easier for a simple majority of shares cast to change bylaws. Companies often prefer supermajorities because they stabilize policy and deter hostile shifts. Shareholders often prefer simple majorities because they keep the board responsive. If you want more agility and fewer procedural roadblocks, vote for eliminating supermajorities. Proposal 11 likely overlaps on the same theme. If both appear, read the fine print but know they pull in the same direction. Proposal 12 asks whether directors should be elected annually instead of on staggered multi-year terms. Annual elections increase accountability, but can raise turnover and short-term pressure. If you want the option to refresh the board quickly after missteps, you support annual terms. If you value continuity in long-cycle execution, you keep staggered terms. Now to the strategic adjacency, authorizing an investment in XAI. That's Proposal 7. The theory is clear. Pair Tesla's vision stack and real-world data with frontier-scale language models to accelerate autonomy, factory optimization, and humanoid robots. The upside is integration benefits tied to feedback loops and talent alignment. The risk is related party complexity, capital allocation dilution, and dependency on another Elon-led entity. If you believe the synergy outweighs the governance friction, vote for. If you prefer vendor neutrality or arm's-length partnerships across multiple AI providers, vote against. The next group of proposals come from shareholders and speak to values, transparency, and access. Proposal 8 aims to tie sustainability and diversity metrics to executive pay. If written well, these frameworks can improve risk management and lower cost of capital by aligning with long-term externalities. If written vaguely, they create red tape and measurement theater. Your choice turns on whether you find the specific metrics, data sources, and verification mechanisms robust. Don't vote on the slogan. Vote on the mechanism. Proposal 9 requests an independent child labor and supply chain audit focused on minerals like cobalt. The stakes are reputational, legal, and ethical. For a company scaling batteries and energy storage, supply chain clarity is operationally relevant, not just PR. A yes signals you want third-party validation and public reporting, even if it creates short-term disclosure discomfort. A no suggests management's existing controls and reporting are sufficient, and you don't want additional audit expense or potential mischaracterization risks. Proposals 10 and 14 relate to thresholds for submitting future shareholder proposals. Under current rules, small holders can place items on the ballot if they meet ownership and holding period minima. Lower thresholds democratize agenda setting but increase noise. Higher thresholds reduce spam but can lock out legitimate minority concerns. If you value the ability for smaller investors to propose, vote for keeping thresholds low. If you want to concentrate agenda setting among larger, longer-term holders, vote against. You may also see a proposal that reaffirms prior majority votes or duplicates the supermajority items. The signal there is less about substance and more about emphasis. If you think the principle has already been addressed elsewhere on the ballot, you can vote against duplicates to keep governance clean. Let's zoom out. What is this vote actually deciding? First, whether Tesla doubles down on a founder-driven structure with explicit performance gates that, if achieved, cement significant voting influence. Second, whether the board is refreshed or reaffirmed. Third, whether Tesla's constitution becomes easier to amend by a simple majority. Fourth, whether Tesla formalizes a strategic investment in an external AI company closely linked to the CEO. Fifth, how open the gates remain for small holders to raise future issues, and how deeply Tesla audits its upstream supply chains against child labor risks. Each of these levers affects execution velocity, cost of capital, trust with regulators and partners, and the company's ability to recruit and retain the best engineers. How should a rational long-term shareholder think about it? Start with first principles. Tesla's value over the next decade is not a function of quarter-to-quarter deliveries. It turns on a handful of compounding engines: autonomy and the software stack around it, manufacturing excellence that drives cost per unit down the curve, energy storage scaling with grid-level reliability, and the potential of general-purpose robotics. If you believe those engines are most likely to compound under a highly centralized, founder-led model with aggressive incentives, you will favor the leadership and XAI proposals, and you'll likely prefer removing supermajority constraints. If you believe those engines require more institutional ballast, stricter checks and balances, and insulation from related party optics, you will split your vote for innovation, but with firmer governance counterweights. Both paths can work. What matters is coherence. Don't vote for maximum founder control and maximum board micromanagement at the same time. Pick a model and align the pieces. There's also a tactical point. Votes are a message. If you support Elon's incentive plan, but want clearer oversight, you can vote for 3 and 4 while withholding from specific committee chairs. If you oppose related party entanglement, but like simple majority governance, you can vote against 7 and for 6. If you want stronger ESG integration, but only with auditable metrics, you can vote against 8 this year and invite a tighter resubmission next year. Your ballot can express a vector, not just a cheer or a boo. Some practical guidance. Check your brokerage inbox for the proxy link. If you can't find it, search your broker's name plus proxy vote in your email. Verify your shares are recorded under the correct account. If you hold across multiple brokers, vote each control number. Read the summary pages of the proxy statement before you click. They show the board's recommendation and a short rationale. You do not have to agree. You do have to be consistent with your own thesis. Submit early to avoid cutoff issues. You can change your vote before the deadline if you rethink it. On outcomes, expect volatility around the meeting as the market handicaps participation and reads tea leaves on support levels. Don't confuse the vote with fundamentals. The company you own on the day after the meeting still needs to ship products, hit margins, reduce defects, and convert software roadmaps into recurring revenue. A good governance structure can help. It can't substitute for execution. Where does this channel land? We recognize Tesla's unique position at the intersection of transport, energy, and AI. We also recognize that good governance is a force multiplier, not a brake. Our baseline is performance-aligned incentives for leadership, a board that can and does challenge management constructively, simpler shareholder voting rules that avoid procedural deadlocks, rigorous third-party auditing where reputational risk is material, and careful scrutiny of related party investments with clear guardrails and disclosures. Translate that into your own ballot. If your conviction rests on founder-driven breakthroughs, weight your vote accordingly. If your conviction rests on industrial excellence with institutional checks, weight it differently. Either way, vote. Non-participation hands your power to someone else. Here is the simple flow you can follow right now. Log in to your broker. Open the proxy link. Decide yes or no on proposals 3 and 4 based on your view of founder incentives. Make a seat-by-seat decision on directors that reflects your view of recent oversight. Support or oppose removing supermajority rules based on how responsive you want the Constitution to be. Decide on the XAI investment by weighing synergy against governance friction. Choose your stance on supply chain auditing and proposal thresholds based on your tolerance for noise versus transparency. Submit. Save your confirmation. Whatever you choose, make it intentional. This vote is not a referendum on internet drama. It is a structural choice about how Tesla will be led, checked, and accelerated through the next decade. If you believe in the mission, hold leadership to standards that maximize the mission's odds. If you want better governance, design it to enable speed rather than replace it. The robots, the batteries, the factories, the autonomy stack, none of it builds itself. People do. Incentives guide those people. Boards hire and fire those people. Shareholders set the rules for both. Use your voice. If you found this useful and want more deep dive, data-first breakdowns of energy, AI, and the builders shaping the future, subscribe to Future Forged on YouTube, support the work on Patreon, and check the merch if you want to wear the brand in the wild. Your vote matters. Your attention does too.